stream. You're watching a fresh edition of Opening Bell with me, Lovisha Darad. Well, yes, it is going to be a somber start on the final day of this week because we had the former Prime Minister Dr. Manmohan Singh passed away at the age of 92 yesterday. He was an architect of 1991 economic reforms that saved India from bankruptcy, and even during his tenure he implemented MNREGA, Right to Information Act, and expanded the rural electrification programs as well. So yes, he will be remembered in all our hearts by all of us. The government is expected to announce a 7-day mourning period in a cabinet meeting which is scheduled at 11 a.m. and most of their programs, government programs, are expected to be cancelled during this period as well. But yes, back to the markets. After a range-bound session yesterday, the GIFT Nifty is once again hinting to a quiet start today. Even the pre-open rates are pointing to a very mildly green, flat start for the Indian markets. It is the holiday time, so thin trading is expected, so no surprises on that front as well. On the global front, we have a mixed handover coming in. US markets yesterday, they ended mixed overnight. And Asia this morning also has exhibited some of the mixed trends. We saw the Japan's inflation numbers that came in higher than expected in November. So yes, the Asian markets have also opened on quite a mixed note as well. Now today will be the beginning of the January series. So we will be taking some stocks in focus, and we'll be talking about what your trading strategy should be at this point of time. So don't go anywhere. Keep posting your live queries on our live feed as well, and we'll take them up shortly as well. But for now, let's just take a quick look at the top headlines this hour. Wall Street closes mixed amidst thin trading and low volumes. The Dow closes higher for 5th straight day, while Nasdaq Composite and S&P 500 end lower. Meanwhile, Asia Pacific markets trade mixed, and GIFT Nifty implies a flat start for our own markets. Crude prices edge lower amid stronger dollar, with Brent trading $73 per barrel, while gold prices rise driven by safe haven demand. 5 new listings to hit Dalal Street today. DAM Capital, Transtrail Lighting, Mamta Machinery, Sanathan Textiles, Concord Environment Systems will make their stock markets debut today. And yes, former Indian Prime Minister Dr. Manmohan Singh has passed away at the age of 19. He died of age-related conditions and was admitted at AIIMS, New Delhi last evening. He was the Prime Minister for 2 terms under the Congress-led UPA alliance. All right, yesterday we did see quite a volatile session because it was the expiry day. Sensex and Nifty both were largely unchanged, and we saw India Wix, which is the volatility gauge, that also spiked up by 6%. What supported the market enthusiasm yesterday were the autos and the pharma stocks, and what contributed to the fall was the banks and metal indices. Now, that was the December series, and we saw the 3rd straight series of declines, which means that the Nifty has already dropped around 10% in the last 3 series. So, October, November, December, all 3 series we are seeing declines for the Indian markets. Now, it will be the start of January series from today onwards, and historically, if we have seen that Nifty has declined about 7 out of 10 times in the last decade. So yes, the January series is a seasonally weak month. So we'll be watching out on the stock developments on that front. We also have 5 new listings in the street today. So we will be watching out for those as well at 10 a.m. How they actually pan out in today's market, because it's a thinly traded volume. So we'll see whether or not they can give a stellar debut. But for now, for today's trade, let's take a look at some of the cues that will set the tone. First up is your option cues data. The Nifty put call ratio that fell to 0.89 levels from 0.94 levels in the previous session. So yes, there is some bearish call coming in for the market. And the next is the fund flows data on your screen. The FIIs have extended their sell-off for the 8th straight day now. They have sold about 2,400 crore rupees worth of Indian equities in the last session. On the other hand, the DIIs have supported the markets, and they have bought around 3,336 crore rupees worth of Indian equities. Now, just a couple of minutes before we head to the opening bell, but let's quickly get on board with our technical expert of the show, Raja Venkatraman of NeoTrader. Raja, good morning. So good to have you back.
Yeah, good morning, Lovisha. Thank you for inviting me to the show.
Raja, let me start off. Market has been on a wait and watch mode. It is trading in the range in the last couple of sessions as well. So what are the next level that you're watching out for Nifty?
Yeah, the way the market has been behaving, it has been quite clear that there is a lot of indecision on the floor. And this kind of uncertainty is heightened by the fact that even yesterday, on the expiry day, we did not witness much of a moment. So, yes, all of us are waiting for the famous Santa Claus rally. But we got to see whether today could be a beginning of the move. That is something which we need to watch out for. Though we are witnessing a flattish open, we need to see whether the shorts that have been built over the last few days will lead to some short covering action, and that can trigger some bullish momentum. Well, the scenario is not yet giving us any signs of a trend because the upper levels around the resistance zones, around the 200 DMAs, around the 24,100 mark is where I'm expecting the rise to complete. So yes, we are having some room on the upside, but then what one needs to consider is that the scenario is not witnessing any kind of triggers per se. So one should not consider this as a revival of bullish momentum. It's a bullish phase which is emerging in the market after some uncertainty. So overall, the market continues to emit very mixed vibes here. There are stock specific actions that are getting in place. So if one is not in the right stock, then they are either stuck with the position, or if you are an intraday player, you are forced to square off your position at the end of the day. So one needs to be very careful here because the market is definitely a scenario where you have to participate because that's the way you will be able to generate some return. But then it's also imperative that one should not get carried away. Why? If you see too many greens on the screen or too many reds on the screen, because none of the trends are getting manifested. Now, one of the main reasons has been that Bank Nifty, which played a crucial role in a few weeks ago, is now found slipping. And especially after the RBI policy, the banks have given up, and we can see that the momentum continues to be suppressed. So, unless and until, according to me, if Bank Nifty doesn't rev up, then we will still have a very lucid momentum. So, overall, the scenario continues to be very tense, and there is no clarity at the moment. So on the downside, I would say 23,500. On the upside, I would say 24,100. So these are the two levels which I would watch out for. And unless and until I achieve a end of day closing, I will below or above these levels. I would not turn aggressively bullish or bearish. I would continue to scalp for a few points, and then I will look to exit my trade.
Okay, all right. But Raja, what about the Bank Nifty levels? What are you targeting on that? Because from the past two sessions, Bank Nifty has been on a declining trend.
Yeah, so Bank Nifty, the key level, the immediate resistance zones for Bank Nifty is around 52,000, where we can witness some call writing there. So unless and until 52,000 is crossed, then the next level will be at 53,000. Now, for Bank Nifty to participate, there is not much positive movement seen from the heavyweights like HDFC. ICICI began the day well yesterday, but then it soon gave up its gains. So it clearly is not witnessing some action from the high weighted stocks in the sector. So I would think that Bank Nifty would need some more time and await some more triggers before the move can start. Now the triggers, so while the FI shorting data is emerging on a day-to-day basis, one also needs to consider that this is a time where they will not be in much of action. So when you're going to look at those kind of trades, or when you're looking those kind of data, one should also consider the period in which that data is coming and then make a correlation.
All right, make a correlation with it as well. But yes, just the opening rates, which will be flashing on your screen in just 1 second or two. We'll see how the markets have opened. It did see a tepid start expected, but it's opened flat in the green at this point of time, 23,800 mark. Yesterday also we couldn't sustain above that 23,800 mark, but today we have opened above that 23,800 mark at this point of time. Let's see some of how the Sensex is doing at this point of time. Well, it is up about 250 points at this point, and it is above that 78,700 odd levels. The advanced decline ratio is looking fairly positive at this point of time. but let's see how the India VIX is performing, because yesterday it had spiked up by about 6%. Right now it is flat in the red, but above that 40 odd levels as well. Bank Nifty is doing well. After 2 days of straight losses, Bank Nifty has picked up pace and it is up about 0.4% at this point of time. Autos once again extending its gains to the third straight day, up about 0.4%. Pharma index unchanged at this point of time. Let's take a look at how the media index is doing. Media index is also up about 0.4%. Metal index is doing well, 0.2%. So majority of the sectors have opened up in the green, and some of them are like largely unchanged as well at this point of time. But we'll see how they actually pick up pace in the later half of the segment. Let's look at how the broader markets are doing. Small caps up about 0.4%. Mid caps are up about 0.3% at this point of time. So yes, overall the overall breadth of the market is looking positive at this point, but we'll see whether or not this momentum is sustained throughout the day as well, because the selling pressure usually kicks in during the later half of the segment. So we'll see whether this momentum actually sustains throughout the day. But what the top Nifty gainers at this point of time stand out to be is Tata Motors, ICICI Bank, NTPC, Bajaj Finance. Both the Bajaj twins are doing well. Bajaj Finance and Bajaj Finserv, both of them on the Nifty 50 gainers list. Top losers, on the other hand, conversely, include the likes of Apollo Hospitals, HCL Tech, Titan, Britannia, Hindalco. Titan and Britannia once again on the losing end of the Nifty 50 gainers, Nifty 50 losers list. Yesterday also we saw consumers not playing out well. Today also they have extended its losses in today's trading session as well. Hindalco, one of the metal names, seeing a profit booking again down about 0.2% at this point of time. So yes, plenty of action which is going on, but we'll see how this pans out in the later part of the segment. But Raja, how is the cement placed? Because we are hearing some capex announcements could be on the horizon. Spending could increase from the second half of the fiscal year. So how are you placing the cement stocks at this point of time?
Yeah, one of the reasons have been the enhancement or the resumption of the public expenditure of the government. So once again, the cement sector has shown some bit of action there, and with the demand for the overall productivity increasing and demand for the construction and infra also giving a boost by the government towards the second half of this year after the elections, we are finding that there is some momentum there in the cement stocks. And out of the cement stocks, I find in particular the setup of JK Cement quite interesting. And I would like to be a buyer in JK Cement because JK Cement has got a good setup, and I would be a buyer in JK Cement. So from the cement pack, if you're tracking any stock in particular, then I would go first for JK Cement and then for Ramco Cement.
Okay, JK Cement and Ramco Cement as top picks. But let's take some stocks in focus. That is your IndusInd Bank, which is first. It has reacted positively to this news, up about 1% after the lender is planning to offload about 1,500 crore rupees of their non-performing microfinance retail loans. Raja, IndusInd Bank, the stock hasn't been performing well from the past 6 months. And of course, the second quarter did play a spoil sport because it did raise about alarms about the MFI loan book. Now that the lender is planning that, some of the part would be sold off, do you expect the mojo to return to the stock?
Yeah, so IndusInd Bank, yes, amongst the private banks, it has been one of the laggards, and it has been on the decline for almost the last 2 to 3 months. Now with the positive news flow coming in, the stock has also reached a point of oversold condition and has been plateauing over the last few sessions. Yes, there have been some minor dips, but then the prices have been able to stabilize, and they are starting to show some revival. Now with the positive news flow coming in, we are seeing that it is showing some signs of revival here. Yes, it's not a scenario for bottom fishing yet, but then I would definitely play it for an intraday play.
Okay, intraday play. Let's look at Star Cements. That is reacting positively at this point of time after an alert has come in that the Ultratech has bought about, about 8% stake worth in 851 crore rupees in Star Cements. So yes, Star Cements reacting very positively to this news. How are you seeing on the charts? Raja, how is Star Cements placed at this point of time? Because if you look at 1 month chart, the stock has performed well. YTD also, the stock has been doing well. What do you see the next target for Star Cements?
Yeah, definitely. It's a very positive sign of takeover, and the reaction which we are seeing in the last 1 month, it's evident that the particular news flow has been pricing in by those who were aware, and the kind of momentum which we are seeing augurs some fresh momentum here to the upside. Stock did see a very good trajectory in 2024. It took a pause at the start of 2024, and then once again it has resumed. So overall trends are very good. 2023 was excellent. 2024 was a consolidation year, and now towards the end of 2024, it's triggering some fresh vibes for 2025.
All right. Now let's quickly move on to our viewer queries because they have been, waiting in anticipation and they have been giving us out their questions as well. Well, the first query coming in from Naveen, he's asking the view on PCBL. PCBL, Raja, how do you think the stock is performing? Because if we look at the 1 month chart as well, the stock is up about just 6%. But if you look at 3 months, it's down about 19%. So what are you eyeing for PCBL at this point of time?
Yeah, now as there is a growing improvement in the industrial space, we can see that this stock has been finding attention from all the retail participants. The stock witnessed a very sharp rise at the start of 2023 and also 2024, and it has just witnessed some bit of profit booking in the current market scenario. But then the profit booking was only by those. It was just a knee-jerk reaction, and what has happened is that at lower levels in the region of around 220, it has at around 380 to 390, it has found some buying interest emerging. So now this is a good time to get into PCBL because it has given a nice reaction, and the overall setup is not disturbed. So one can look to buy into this counter as this particular sector is going to receive more attention. So one can participate from the sector momentum as well as the stock momentum.
Okay, all right. Let's move on to another viewer query, that is Kishore. He's asking the view on Torrent Power. Well, Torrent Power did see a maiden, QIP recently, 3,500 crore rupees they have raised. However, from the October highs, the stock has been on a declining trend. So what do you see? Do you expect the bullish momentum to re-emerge, Raja, for the stock?
Yeah, so the power sector, all of us are aware that it is definitely a sector which is in demand. So many different themes are coming up in play. So this stock is not going to go out of the radar. Yes, while on the higher time frames, it is showing some reaction, largely due to the current market scenario and the profit booking. But as you go down in the lower time frame, you can notice that there are some good support levels that are emerging in Torrent Power closer to the region of around 1320 to 1340. So where one could actually look to buy into Torrent Power because that will be a good support zone for investing into it. So one should look to invest into that zone.
Okay, all right. Let's move to another viewer query, that is your Kartikeya Singh is asking the view on Time Technoplast and whether or not it can be bought at the current level and what can be the target going ahead. Raja, how does the stock look like on the charts? Because 6 months also the stock has performed well. 1 month also the stock has been giving good returns, about 14% uptick.
So the overall momentum of this stock is remain positive, and with the kind of momentum which we are seeing right now, I think that one should actually hold on to their position and continue to wait for more upward traction because on every time frame it is looking on the positive side. Yes, the run may seem a little overextended, so one can look to book some profits here and book some partial profits, look at lower levels to buy into. So lower levels would be in the region of around 380 to 390, which would be an ideal level to get into the stock after booking some profits at higher levels. Yes, the momentum is extended, so it's advisable to book some profits, but not exit it 100%.
Okay, not exit at the 100%. Let's move on to another viewer query, that is your, he's asking, Shweta is asking on the view on Divi's Lab for 3 to 6 months and whether it is a good level to enter or to average at this point of time. Divi's Lab on the charts, it hasn't really performed well if we look at from 1 month perspective, but 6 months it has performed well. What are you expecting the next move could be for Divi's Lab, Raja?
Yeah, Divi's Lab has been showing some good momentum here. And yes, if you see over the current month, it may seem some correction kind of scenario emerging. But I would like to say that it's better to stay with Divi's Lab. The levels to invest are at much lower levels, closer to the region of around 4,700 to 4,800. So that would be the level to add more funds into this particular stock. So it's not a time for profit booking yet. So I would advise to hold on, and there is no scenario that is emerging for profit booking. So one can hold on to Divi's Lab.
Okay, one can hold on to Divi's Lab. Let's move on to another viewer query. That is, your Pankaj is asking the view on HPCL, Hindustan Petroleum, and whether or not it is a buy at this point of time. Hindustan Petroleum, Raja, how does it look on the charts? Because we saw in the second quarter, the company did see a fall in the refining margin as well. So do we expect that, the Q3 could be better for the stock?
Yeah, amongst the OMCs, there have been a lot of discussion about the OMCs, especially after the Jeffries upgrade of IOC. But then amongst all the OMCs, I find HPCL to be one of the better bets. And in every show which we discuss about the OMC, I always go for Hinpetro. And Hinpetro charts are looking quite encouraging. And one should be looking to buy at current levels, because there is good momentum that can emerge in the next few months. And I can see a target emerging towards 700 within the next 1 year.
Okay, 700 for within the next 1 year. So quite a positive commentary coming in. Let's move to another viewer query. The same on Alex is asking the view on ONGC on current levels. ONGC, it has fallen about 10% in the past 6 months. But where do you see the stock going from here on?
Yeah, ONGC had received a good upgrade. It had got the lot of positive news flows as well, and that was the encouraging sign a few months ago. And in the second half of this year, the stock has witnessed some sharp decline. And on every time frame of the charts, they have come into some good set of supports here. So those who are having ONGC can look to invest into ONGC right now, because the stock is definitely one of the major listers here. And with the momentum showing some upside, and with also HP having a stake in ONGC, I feel that the ONGC could now revive from the current zone. So one should buy into ONGC right now.
Okay, one should buy into ONGC. Let's move to another viewer query. That is, Palash Mondal is asking the view on Spark. Spark, Raja, how does it look like? Because Q2 we saw that the net loss had widened for the company, and even if we look at the charts, the stock hasn't been doing well, and it has been an underperformer. Do you expect the underperformance to continue in the near term as well?
Yeah, compared to its parent company Sun Pharma, which is trying to revive from lower levels, Spark has not been able to display that kind of momentum yet. And with the stocks unfailing to generate some upside, I feel that we could be entering into a zone where one should not be investing further into this. So level for exiting would be closer to the region of around 185. Below 185, one should not hold on to this stock.
Okay, all right. Let's move on to another viewer query. Well, Anand Swaminathan is asking the view on Aditya Vision. Aditya Vision, how does the stock look like on the charts? Because it is YTD, if we see, the stock has given good returns, about 50% returns. What can we expect the new year holds for the stock?
Yeah, this stock is is undergoing some pressure right now. So I would wait and watch before I invest further into the stock.
Okay, you'll be waiting and watch. But let's move on to next stock in focus. That is your Gensol Engineering. The stock is reacting quite sharply at this point of time, because after the company has secured about 897 crore rupees contract from NTPC Renewable Energy to develop 225 megawatt grid connected solar projects. If we look at from the 6 months charts, Gensol Engineering as a stock has been spiraling downwards. Raja, do you see any optimism on the horizon, because the stock has been reacting quite sharply? It is up about 6% at this point of time.
Yeah, the kind of sector which it is in, and the requirement for the project which it has managed to grab, and also the sector play. So I think that over the last 3 months, the stock has been consolidating, and I feel that the time for revival is coming into the stock. So yes, while the decline has been largely driven due to the profit booking which we witnessed in 2023. Now we are witnessing some bit of support levels emerging. So this should be a time to wait and wait for a movement above 830 to invest into the stock.
Okay. We have another viewer query, that is your Satya is asking the views on Skipper. Well, it's a multi-bagger stock, Raja, this year. So do you expect the outperformance to continue into the new year, or do you believe that the stock is already quite on an overbought levels?
This stock has gone up quite a bit. It has defied gravity, so to say. But then this month, it has definitely shown some signs of reversal here. There is a negative formation here. Yes, the industry trends will definitely percolate, but then it's best to book profits now and look at lower levels to buy into.
Okay, lower levels to buy into. But just one last question before we let you go, Raja, at this point. What are your trading picks at this hour? What do you think would be good buys for the new year?
Yeah, considering the market scenario and lack of certainty, I would be going with a buy as well as a sell. I would look to get into Oberoi Reality at current levels with a stop at 2300 for an upside towards 2385. And I would like to go with a sell in JSW Steel below 915 with a stop loss at 930 for a target towards 890.
Okay, all right. But thank you so much for joining us, Raja. Thank you for taking our time and answering our viewer queries so patiently. We hope that we connect with you soon
Thank
once
you.
again.
Bye.
All right, let's take a quick check of the markets at this point of time, how they're doing. Well, it did open, quite positively, and both of them are holding well at this point of time. Sensex up about 250 points, Nifty also above that 23,800 mark. If you look at the broader indices, that is also doing well. Small caps up about 0.3%, mid caps up about 0.2%. Auto index, that is flaring up, and of course Nifty Auto once again, is showing an stupendous performance, up about 1% at this point of time. Nifty Auto index. Nifty IT, however, is lagging behind. It is down and it is flat in the red, down about 0.2%. Nifty Pharma also seeing flat in the green at this point of time. Banks are also doing well. Energy, FMCG stocks, all of them holding well. Realty stocks also holding well at this point of time. So yes, markets are doing well, but we'll see whether or not this sustains throughout the day as well. But on that note, let's quickly move on to our next guest of the show. We have Nikhil Oswal of Finterest Capital. Nikhil, good morning. So good to have you back.
Good morning. Good morning.
Nikhil, let me start off. We are at the year end. So how are you looking at the market construct for the 2025, the new year?
Uh, see, 2024 for us has been a roller coaster ride, and it was of course, the money was being made easily. If I can describe it better, it was more like a batting pitch. There were a lot of sixes that were hit, and any ball which were coming in your way, you could play it easily. But now our focus will be, we should change our strategy. The pitch is getting tougher. We need to have defensives in our team, players like Dravid, which can, save our portfolio, and, that is going to play as a hedge for us. So 2025, that is again a year where, Donald Trump is coming in. So we need to understand what the things are going to play out like. Donald Trump's policies, US first, China last. So, of course, that is going to benefit India in a large way. Our terms with Donald Trump has been very good in his era. He's a businessman. He will focus more on, improving the financial stability of US. So I think it will be an interesting time to watch out what is really going to happen once Donald Trump is in the place, and that is what we should focus towards. But of course, the money is going to be made. The sectors are going to be new, and the trade war is going to happen. So we need to focus which sectors are going to do better in trade wars. Ideally, the China plus one strategy. And yeah, I mean, the budget is also around the corner, so let's see.
Okay, all right. But what do you think could be the negative from Trump's policies? It's supposed to be expansionary in nature. So, what could be like for a risk for the Indian markets?
Sorry, I didn't get your question. Can you come again?
No, I said that you talked about Trump's return to the to White House. So, like after his policies are quite expansionary in nature. That's what he's expelled out. So, what could be a risk for the Indian markets, or are they all positive at this point of time?
So risks for Indian markets are going to be, of course, some of the sectors where, there could be some tariffs on India as well. They've recently spoken about, solar as a sector where, they might, put some tariff. So we need to be cautious on those areas. But apart from that, I think it is positive for India only. And if we talk about, India as a country, when it comes to as an emerging market, we are at a very resilient stage right now. I mean, the per capita income is better, inflation is under control. So these things are something which is going to keep us in the sweet spot.
Okay, sweet spot. But Nirav, do you expect Nikhil? Sorry, we had Nirav from Fisdom yesterday. So basically, he shared a target about 27,000 for Nifty. So do you have a similar view, or do you believe that Nifty could approach 28,000 in next year as well?
So, see, it all depends on what the quarterly earnings are going to become like. What we see in the quarterly earnings, the growth is something which is very important to watch out in the next coming second half of the year. In Nifty as a EPS, it was expected to do 1,050 of EPS for FY25, and we have already done 550 of EPS. So we have to cover another 500 EPS, which looks more or like, will be achievable. But for FY26, our expectation was 1,200 and above, which looks difficult right now because the economic slowdown is there. The GDP growth numbers that we saw in Q3, which was 5.4%, I think in second half we should catch up, and post that we should see that what Nifty is going to do and perform like. But probably we should see new highs. I mean, that is what we should always be optimistic in India. In India, we can't be negative at all.
Do you have a specific target, Nikhil, at this point of time for Nifty then?
So when I talk, of course, I mean, when you talk about new highs, it could be 27,000, 28,000. Why not? It can happen. It's possible.
Okay, okay. But what about the broader markets? Because they've also seen a good rally this year. So do you expect the outperformance to extend next year as well?
So broader market altogether, if you understand, Nifty has given around 10% this year, but your small and mid caps have outperformed largely, right? So we need to slow down over there a little. FIs have majorly sold large caps, which is why your small and mid caps were outperforming. So I mean, the money is going to flow back again. So your large caps has to perform better from here on. The ratio of large cap versus small cap mid cap has reached a peak, so being very selective makes sense. The broader market rally is not going to continue as we saw already. And I mean, the money is something, I mean, the money is going to flow from, not going to get out of the market, it's going to remain in the market. So you need to see which way your river is flowing, right? So you need to just follow that.
Okay. But Nikhil, any sectors that you are watching out for the next year? Because we do have the Q3 earnings coming out next year from January onwards. But any sector specific that you are watching out?
So we are, largely looking towards companies which are export oriented. The rupees get depreciating, your dollar is strengthening. Export is something to look at. We are looking at companies, in pharma, in IT, EMS. Then, of course, I mean, some of the specialty chemical companies which are doing really well. Our core focus is to only buy companies where the earnings are going to double in next 2 3 years at a good valuation. You need to be greedy at this point of time. So that is what we are doing.
Okay. What about the metal space? Because we did see, in the second half of the year that there were some announcements related to China stimulus measures, and metal stock did rev up as a result of that. But how does the next year hold for metal space?
So that's very controversial. I mean, metal is something which is very cyclical.
Uh-huh.
So, of course, I mean, since China is also going to cut their rates, and that is going to see a huge rally in metals. But we don't invest in metals because it's very cyclical in nature, and I mean, it's better to stay out of that for now.
Okay, better to stay out of that now. But Nikhil, budget too, that will also going to be keenly watched out. Of course, we are expecting certain spending to go up. But does it fit with the India's fiscal deficit target, and what does it mean for sectors in which is related to capex plays as well?
See, so, first half of this year, we have not been able to reach the capex that, government wanted to. There was a slowdown in the capex, and largely because of the election. Elections were around the corner. We saw, Lok Sabha elections, and then again Maharashtra, Jharkhand elections. So during these times, a lot of companies, keep their capex on hold. They wait for the new regime. They understand what the government outlook is going to be like. But now, I think second half of year onwards, things should be better. We should catch up. The spending will be faster, and our coming to fiscal deficit, it should be in the in control, and even the current account deficit. And I mean, yeah. So
Okay. And how about for the new age stocks at this point of time? Because we saw the likes of Swiggy, Zomato, all of them doing well this year as well. So, what can the new age stocks expect?
see, new age stocks are, of course, they are the ones which are scaling crazily. I mean, the kind of scale that is coming over there is very huge, but it is coming at a very high cost. You can't be buying anything at any valuations. Something you are getting at, 400-500 p, you can't be entering. And this is what the problem is in today's market. The valuations are over the roof in many of the companies where the growth is very fast. So growth at any valuation doesn't make sense. And I think, of course, anytime if you get a dip over here, it is a good buy. The Amazons of the world are also coming towards quick commerce side. So that is the new age business we should be in, but at a very good valuation, not here at all.
Okay. But what are you making of the banking and financial space in 2025? We did hear some news about the MFI and unsecured lending and some higher slippages on that front as well. But can we expect some good news coming in for the new year?
You see, your private banks and microfinance banks and all of them have underperformed right now recently. So the time has come for them. We should focus that side. Even we are looking towards I mean, small microfinance bank, the retail lending side, and I mean that should start picking up now. And it should do well for the coming years. I mean that it has a very heavy weight on our index as well. So that is what is going to take us ahead.
Okay. But on a broader, on a overall market perspective, how are you seeing valuations at this point of time? Because we've seen, three consecutive sell-offs which has taken place. Do you believe that the valuations are still at a higher level, or do you believe that they have come down and Q3, we could approach Q3 on a better note?
See, so valuations are high, of course. I mean, when we talk about valuations, it's not only about the Nifty valuations, it's about the overall market. The broader market valuations are over the top. And, I mean, like I just mentioned, it all depends on what the earnings are going to, be like in ahead, the coming next 2 quarters. We will catch up for sure in the next second half of the year because the demand has improved. We saw the festive season doing well. Your marriages are there. Your hotel industries are occupied fully. The airways are doing well. So it is somewhere, you need to see even the kind of money that is flowing in the market is very, very large. That is not letting the valuations go down for some reason. And right now the recent IPOs that we saw, nearly 2 lakh crore worth of cash was stuck in the IPO. That is a huge money. So, I mean, I think the flow is very strong in the market, and being stock specific makes more sense. It doesn't make sense, seeing something as per the valuation. Like I mentioned earlier, we have to keep playing our game. You need to have the right team and the right portfolio. You can't sit on cash and be on sidelines.
Okay, okay. But we did talk about autos. We did talk about the metal space, and then we talked about the banking space. But any sectors do you believe that could see an underperformance in the Q3? That is a total no go for you.
Okay, so I think sectors where I feel there is going to be underperformances largely moreover where there is high base, growth has already come. So growing over those that kind of a base is little difficult. I think we should see some slow down in the players like defense and railways, and because they've already grown on a very high base now, and they have a high base already. So I think those are the players where we should be a little cautious, and they have become the talk of the town. Avoiding them will make sense right now.
Okay, all right. But with that, we have to let you go, Nikhil. Thank you so much for your time, and we hope that we connect with you soon as well.
Thank you so much.
Okay. Let's take a quick check of the markets at this point of time. Well, Sensex and Nifty, both of them extending its gains from the opening. Sensex up about 400 points, Nifty above that 23,850 level. So yes, a strong move coming in for the markets at this point of time as well. Small caps holding up well, mid caps also doing well. Both of them seeing a good recovery in the markets. India VIX, that has cooled off, slipped below that 14 odd levels, down about 3% at this point of time. Nifty Auto Index definitely holding strong at the current juncture. Nifty Pharma Index doing well. Nifty Realty also eking out some gains. Nifty FMCG also eking out some gains. So both of them, just flat in the green at this point of time. Nifty IT index, which slipped in the red, is now flat in the green as well. So yes, all in all the sectors are doing well, and all of them are trading in the positive territory at this point of time. But the top Nifty gainers that include the likes of Bajaj Auto, Eicher Motors, Tata Motors, Dr. Reddy's. So yes, Auto Pack once again, dominating the Nifty 50 list. On the other hand, the top losers include the likes of HCL Tech. Adani Ports, after yesterday's 5% uptake, has seen some profit booking, and it is down about 0.4%. TCS Hindalco also down up to 0.3%. So yes, a good recovery coming in for the markets. 2 days of losses we saw, and today finally we are seeing some green. So could be some onset of Santa Claus rally, but we could see, but we'll see whether this recovery gets sustained in the second half of the trading session as well. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing how the market has developed, what the stocks were in focus. Until then, signing off, do stay tuned to moneycontrol.com for all the news updates and market insights.